Aloha and welcome to Java. Thank you kindly for joining me. This is for the week of June 2nd, 2024. There is a lot to discuss today. We've got not just jobs. As far as the market, we're also watching inflation and geopolitical risk and a few other things that are going on behind the scenes. There's a lot to talk about today, so let's get right into it. This week, we're going to be keeping a close eye on our risk indicators, the main one being the MMRI, because that puts together for us that 10-year yield as well as the relative strength of the US dollar. So we've got an increased probability of a reversal or a squeeze in the markets that would force them higher. And we're watching this along with the inflation. So right now, fear greed index is in neutral territory. Go over this in the mornings prior to the markets open. We've got this story about the world rate path set to diverge with European central banks' first cut. So, talking about this, we've got Wall Street looking at the May jobs report this week. It's going to come out on Friday. The update for the non-farms payroll will be the last one prior to Federal Reserve meeting on June 11th and 12th, and the market's going to be watching for clues of rate cuts coming out from them. So we just got on last Friday the April PCE inflation report, and that showed the Fed's official target, basically 2.8%, relatively steady from March's reading, although it's showing that inflation is continuing. So with the expectation that the ECB is going to cut on June 6th, that would diverge from the Federal Reserve that's not expected to cut until later in the year. I would also like to point out that June 6th happens to be the 80th anniversary of D-Day. So we've also got investors watching this week NVIDIA ahead of the 10-for-1 stock split that's about to become effective after close on Friday. So my take on that is, in general, historically, that is a buy the rumor, sell the news event. So expecting that stock very likely to have a ramp up, and then after that will sell off a bit. Not financial advice, that's just historically what happens with those. So let's go on to our calendar and earnings that we're expecting this week. We've got the PMI coming out on Monday for manufacturing, showing that Jolt stops reports on Tuesday, looking at our more prices and information on Wednesday, jobless claims Thursday, and the big non-farms payrolls unemployment on Friday. So with this, we've got this charts showing what has been going on with non-farm payrolls has been in decline for the past 6 months. So if this continues, it's going to bolster the argument for Fed rate cuts. And as we've spoken about before, the Federal Reserve has two mandates. First, price stability, which is going out of control with inflation. The second is employment. If this employment comes out weak, it does bolster their argument to cut rates, which would be good for the markets. Because what happens when the Fed cuts these rates will get a spike in this market. And as I said yesterday, that is when the real pain begins, because we're talking about inflation, hyperinflation initial event. The ECB, if they cut in June, and the market believes so, we are going to see this disconnect, and there will be increased inflation for the euro. So let's talk a little bit more about that. First, we've got our earnings that we're expecting this week. Some of the larger ones are going to be CrowdStrike. Tuesday's going to be a big day. Also got, we'll be looking at some of the larger ones here. Lululemon is a big one that investors are watching. Smartsheet and a few others. NEO coming on Thursday. Those are largely traded Chinese vehicle company. So with that, let's go into a little bit more about what's going on behind the scenes. So JP Morgan is predicting an unavoidable crisis for the US dollar. What are they speaking about? Basically, inflation, hyperinflation. We've also got Peter Schiff talking about this dollar breaking down, and as soon as it does, runaway inflation. And he's speaking of investors being completely unprepared. basically is getting at that they do not have enough invested in real assets, meaning gold, other things that you would, basically anything you would trade the dollar for. So with this, we've got key engines of the United States consumer spending losing steam all at once. One of those key sectors is housing. So the current administration in the United States coming out with a housing plan, what it boils down to is a $10,000 credit for either first-time home buyers or if you are purchasing a home and selling yours. They're kind of not expecting this to go well, but they're trying to bolster the housing market because it's a huge one with this dropping down. It has gone down precipitously, not talking about it in the news because that is creating more of a crisis. So on the opposite side, they're speaking about services because US is mainly services, not manufacturing. And they're saying as long as inflation stays near the 4% mark, that the Fed won't cut rates. So this is the battle they're in. Basically, inflation, I think superinflation is what's coming. We've already got, it's all a matter of degree. We've got severe inflation now. Hyperinflation can come after that, and then superinflation is as it approaches, like basically near valueless. That's the point in time. Everyone will be basically a millionaire, and it won't hold an awful lot of value. So, with this, we're watching inflation, how this works. I'm going to put a link in the description on Iran, and they just saw hyperinflation as well as Venezuela. But this is a good video that shows exactly what is going on as far as from a consumer aspect and what you can expect with this. So the first one that will experience this is in Europe, and it's not going to be equal. And I'll talk about that in a moment, why different countries are going to be different. So with Europe facing higher inflation challenges, what's going to happen as soon as they cut is it's going to be much less expensive for the United States to purchase European goods. Europe, you will experience inflation. Trying to purchase anything outside of the euro will become very expensive for you. And you're going to watch your purchasing power just devalue. So increased inflation there. And I've got on the other side, well, no one was paying attention. The Reserve Bank of India quietly moved over 100 tons of gold reserve from the UK to India. This is the first time since 1991 they are storing gold in their own vaults. They also purchased an additional 24 tons of gold in just 4 months. So that's 1.5 times more than it purchased for all of last year, 2023. So China, Russia, and India are all bolstering their gold reserves. And they are getting ready for this, basically this currency crisis that is coming in. So we've got unemployment rates up from last year in 78% of US metro areas. Now, Denver is an exception. They have a labor shortage there. So if you're looking for a job, you may want to look at that area. There's also a few others. So it's not happening evenly. Because I'm getting people saying, well, it's, a little different here for me, Lava. Well, it's not going to be across the board. But in general, this is how things are happening. We've still got bank failures. And with these going on, we've got a streak of bank sales, basically credit unions, a little bit different. So we've got them merging, purchasing each other, and more collapsing. So with the economic collapse, they're talking about the International Monetary Fund. This is ironically, they're blasting the US over unsustainable debt taking. But if you're going to inflate a currency, that is the smartest thing to do. So if you take on a loan for $1 million and then you make it worth a lot less, you hold your gold, then you trade it back for that debt. You're paying it back cheaper than you would have. So the United States is basically going to be inflating away their debt. So there is an imbalance, and I said I would bring that up. We've got the S&P downgrading France's credit rating. So France is going to have a very difficult time. Their debts just went up relative to the rest of the Eurozone. And Euro area inflation rate rising more than expected. That's not good for France. They also have higher than the rest of the area for unemployment. So with this, we've got Turkey poised to reach the worst of their inflation peak. Now, we talked about them being a key player. They're kind of not just a land bridge, but also monetary bridge between what's happening with these superpowers going on. So they're coming out of their inflationary phase, gaining a little more, basically, traction with the economy as far as from their side. So we've got Wall Street versus ChatGPT. 1 year price targets for Apple stocks. In the news, we've got Apple kind of teaming up with ChatGPT. That's positive for them in what we call the larger Mag 7 stocks. Okay, now moving to a little bit more geopolitical risk with Globe. We've got what's going on at the Swiss quote unquote peace summit on Ukraine. So they're being very quiet about this in talks with what's going on there. We've got the Western world is still looking to sanction Russia. SWIFT is their payment system, and they're trying to cut down their basically their trade currency that's going on. And we've got Dubai saying, basically calling it out. Western restrictions do not halt business. Sanctions are ineffective, and they simply redirect it. This from the chairman of UAE, and this is true. In fact, we've seen that historically it's good for the countries that they're sanctioning. So with this going on, we've got the people that are not in favor of all of these wars going on. We've got hundreds protesting Ukraine aid in Berlin. They realize they're going to have to be paying for this in the long run, and they're against it. In the meantime, we've got them basically poking the bear with Russia, allowing firing on Russian ground. So they had NATO fighters scrambling. This is basically in Poland. There was a massive Russian aerial assault they're talking about. Russia is hitting Ukraine in their energy sector. Putin is not new. He knows how to hit with these wars and what's going on. So Kiev is now looking for more air defense assistance. They want to strike on Russian soil. It's heating up. This could potentially cause a black swan at any moment. They've already planned out the 7-layer defensive line plan for the border between NATO and Russia. So just not good. So in general, we've got all of these things going on in the background. Things could change on a dime. The United States, if they do cut rates, that could cause a spike in the market. So be ready for anything with this. Become self-sufficient, stack real assets. And until I see you again, my friends, in the morning, stay free.